Welcome back to Investing Talk podcast. Today we're tackling a question that's come up quite a bit from you, our listeners. Is Dragonfly Energy Holdings a good buy right now? They're a pretty well-known name in deep cycle lithium-ion batteries, especially for RVs, boats, solar, that kind of off-grid stuff. We've gathered, well, quite a stack of sources, analyst reports, their financials, industry buzz to really synthesize what's going on, recent momentum, what's coming up, the technicals. Our goal here is to give you the full picture, cut through some of the noise and speculation. Before we really get into it, just a quick reminder, if you find this helpful, please do subscribe, like the video, share it around. It really helps the show.
Oh, and definitely, if there's a specific company you want us to look into, just drop it in the comments below. We do read those. Okay, so let's unpack Dragonfly Energy. They basically have two ways they sell, right? Direct-to-consumer, DTC, and then selling to other companies, the OEM channel. And while, sources suggest maybe some softness, maybe seasonal on that direct side,
the real story, the financial driver these last 3 months, has been business to business, B2B.
Yeah, what's really interesting, I think, is how sharply they've pivoted strategically towards that OEM market. If you look at Q2 2025, net sales were $16.2 million, which is good, up 23% year over year, strong growth.
Right.
But the OEM sales part, that specifically grew by, wait for it, 50.6%, hit $10.1 million.
Wow, 50%.
Yeah, 50.6. It really shows they're figuring out how to scale up that wholesale side of the business.
And that 50% jump, that's what gets the institutional investors interested, isn't it? Because it's more than just, hey, we sold more stuff.
Exactly. It signals a shift. They're scaling the wholesale side, moving, a bit away from the maybe higher cost, less predictable direct consumer sales. And we're seeing major industry players basically nodding along. Huge validations. First, you had Airstream.
The RV company.
Right. In July, they made Dragonfly's batteries, the Borderline PO1s, the standard lithium option, across their entire RV lineup.
Okay, hang on. That acronym, Life Pure. We see it everywhere with batteries now. For someone maybe used to old lead acid, what's the key takeaway there? Why does that matter?
Good question. LiFePO, it stands for lithium iron phosphate. And in these kinds of mobile deep cycle uses, it's really become the gold standard. Why? Well, it's much safer. Better thermal stability than, say, the lithium ion in your phone, less risk of issues, and crucially, it lasts way longer, many more charge cycles, and you can drain it deeper without damaging it. So when Airstream says standard, they're backing the safety and the durability of Dragonfly's specific tech.
Got it. Safety and lifespan. And that validation kept going, didn't it? September, they announced more with Ember.
Correct. An expanded deal with Ember RV. They're integrating Dragonfly's battery systems, standardized ones up to 7 kilowatt hours, right into new vehicle platforms.
So it goes from being an add-on you might choose to just part of the vehicle build.
Exactly. And when you make that jump from optional accessory to standard integrated equipment on major vehicle lines, well, you become part of that industrial supply chain. That's a big deal for investors looking at a smaller growth stock like this. It reduces volatility, reduces risk perception. It's a key metric.
Okay, shifting gears a bit. Operations. The company isn't profitable yet. Trailing 12 months, net income is negative, about $30.45 million. But the cost side, managing expenses, that actually looks like it's improving.
It does, yeah. They managed, 430 basis point improvement in gross margin just in Q2. Brought it up to 28.3%.
Okay, break that down. 430 basis points.
Right, so think of it like this. For every dollar they made in sales in Q2, they kept about 4.3 cents more after production costs than they did the year before. It's a really strong signal that they're getting better at managing costs, becoming more efficient. It shows a path, towards eventually getting profitable, which is critical for any emerging energy tech company.
And they're not just selling generic batteries. They've got this patent, the wake-speed charge control technology. Why is that specific tech important? Does it create a moat?
It really does seem to be their proprietary edge. Think of WakeSpeed as a smart controller for the whole battery system. It's patented tech that lets the battery juggle charging from lots of different sources all at once seamlessly. Solar panels, the engine alternator, plugging into shore power.
Ah, so it manages all that input intelligently.
Exactly. Reliable, complex charge management. That's incredibly valuable in these off-grid or mobile setups, and it crucially protects them, potentially, from just being seen as another commodity battery supplier. Gives them an IP edge.
So established IP, strong momentum, especially on the OEM side. Okay, let's look ahead now. The next, say, 90 days. What does the market really need to see happen to believe that these OEM wins and this IP translate into, continued serious growth?
Right, the focus really sharpens now onto two main things: industry visibility and the financials. First up, early October, they'll be at the Battery Show North America. That's a big industry event.
Not just marketing.
No, it's more than that. It's a global stage. They really need to show tangible progress on their U.S. lithium battery manufacturing plans. It's about backing up that recent OEM momentum with proof they can actually produce at scale.
Okay, battery show in October, and then the big one, earnings.
Yes, the Q3 2025 earnings report, expected late October, maybe early November, and investors are going to be laser focused. Did that 50% OEM growth keep going through the summer, which is usually strong? And maybe even more importantly, did that margin recovery we saw in Q2 stick or even prove?
So revenue growth is expected, but margins are key for the stock's reaction.
Absolutely. Sources suggest the top line, the revenue, should show meaningful year-over-year growth. But yeah, the margin figures, the profitability trend, that's likely what drives the immediate stock move.
Okay, so those are the scheduled events, but our sources also flag some pretty significant rumors bubbling up. We have to stress these are speculative right now, but in this sector, sometimes the rumors themselves move the needle, so we have to mention them.
It raises that classic question, doesn't it? How much attention should you, the listener, pay to speculation versus confirmed news? Usually, you look closely when the speculation points towards entering completely new market areas outside the core business.
And that's what these rumors do.
Pretty much. The first big one is talk of a potential collaboration with a Tier 1 automotive manufacturer.
Tier 1 auto, like a major car maker or supplier.
Exactly. And the goal, supposedly, is to accelerate Dragonfly's work on solid-state batteries. That's been a long-term strategic goal for them.
Wow, okay. If that happened, that would be huge. It shifts the whole story from RVs and boats into the massive electric vehicle space.
Potentially transformative, yes. The second bit of chatter is around grid storage. Hints they might be involved in a pilot project using their LFP battery chemistry for grid-level energy storage.
Utility scale, another completely different, huge market.
Highly speculative, this one. But yes, opening up utility storage would be a massive new revenue stream. And third, there are these kind of persistent background rumors about a large global industrial company possibly looking at taking a minority stake or maybe licensing Dragonfly's technology.
Okay, any one of those three actually happening would likely re-rate the stock overnight. But they're still rumors. When do we get something more concrete from the big money?
Exactly. You connect the dots to the institutional filings, the 13 Fs that come out in December showing what big funds bought in Q3, and also ETF rebalancing in November. Those 13 Fs, they aren't speculation. They show hard data on whether hedge funds, big asset managers were actually buying shares before any of these rumors might be confirmed. That's the real signal from the so-called smart money.
Okay, let's switch over to the stock chart itself. The technicals, the analyst ratings, they look incredibly bullish right now. What are the key takeaways for someone looking at the price action?
Well, the technical picture is pretty compelling, you have to say. The momentum is clearly there. The stock's been in a solid uptrend, making higher lows. That's that classic pattern suggesting buyers are stepping in, accumulating shares, growing confidence.
And the analysts, they seem to be throwing out some really big price targets.
Exceptionally optimistic, yeah. The consensus rating is a strong buy. The average 12-month target is around $1.50. That's, over 120% upside from where it might be trading now. And then you see even more aggressive short-term targets, averaging around $2.25, with some analysts going as high as $3.
Hold on, though. $3. These are microcap analyst targets, which, let's be honest, can be pretty speculative themselves. Is there actual justification in the sources for that kind of triple-digit potential, or is it just, drawing a line upwards based on that 50% OEM growth?
That's the absolutely critical question to ask. The justification seems to hang on basically three main things. First, yes, that rapid OEM growth confirming their product is desired. Second, the market starting to price in potential value from their solid-state IP, maybe future licensing deals. And third, just the pure technicals. The stock is trading well above its key moving averages, the 10-day, 20-day, 50-day, 100-day. That confirms a technical breakout from its prior range. It's got momentum.
But momentum can cut both ways, especially with that kind of run-up. What about indicators suggesting it might be overheated?
Absolutely. We have to flag the volatility risk. The relative strength index, the RSI, is currently way up there, around 86.6.
And 86 is high.
Very high. Above 70 is usually considered overbought, so 86.6 indicates really strong buying pressure, strong momentum. But it's also like a warning light. It suggests the stock might be vulnerable to a short-term pullback. It's run very fast, very quickly. It might need to catch its breath before it can move higher sustainably.
Okay, so if someone's thinking about this and sees that high RSI, where have buyers typically shown up recently? Where's the support level?
Support seems pretty solid in the roughly $70 to $60.80 range. That's where dips have tended to find buyers lately. Resistance, looking at where it might struggle to break higher in the near term based on those analyst targets and chart patterns, seems likely between $2 and maybe $2.90.
So, undeniable technical momentum, but signs of being overbought short term. Let's talk risks. What are the big concrete business risks attached to a company growing this fast but still losing money?
Risk is definitely paramount here. You have to consider it. Number one is simply the ongoing unprofitability. They need to keep executing. If those margin improvements we saw in Q2 suddenly reverse in Q3, or if they hit snags scaling up manufacturing for those big OEM orders, execution risk becomes a major concern.
And competition. The battery space is, well, it's brutal.
It really is. They're up against much larger, much better capitalized players, especially giant manufacturers based in Asia. Dragonfly's advantage is innovation and specialization in their niche RVs, marine, off-grid. But they have to constantly defend that niche against the giants who dominate the broader EV and utility markets. They're definitely a smaller player in a huge global field.
Any other major risks?
Well, there's also concentration risk. Right now, a lot of that exciting OEM growth depends heavily on a couple of key partners, specifically Airstream and Ember.
Ah, so if something happened with one of those big contracts.
Exactly. If one of those major deals were scaled back or lost, that would hit the revenue outlook pretty hard and pretty fast. Dependency on a few large customers is always a risk factor.
Okay, so let's try and synthesize all this. Based on the sources, we're seeing a company with really rapid OEM revenue growth, which seems to have better margins. They've got compelling tech progress, both with their current batteries and that longer-term solid-state potential, plus the IP protection. Analysts are clearly bullish, maybe even extremely so, and the stock chart shows a strong technical breakout.
That sums it up well. The final sort of synthesis from all these sources points towards an overall bullish rating. Let's call it an 8 out of 10. It looks positioned, potentially, as both an interesting short-term trade, playing that momentum around the upcoming earnings and the battery show buzz, and also as a longer-term investment, really a bet on the whole electrification trend and energy storage growth, but specifically in these specialized markets where they have an edge.
That clarity, looking at the fundamentals, the speculation, and the risks, hopefully gives you a much better handle on the situation. Thank you for joining us for this analysis of Dragonfly Energy. And please keep those company suggestions coming in the comments. We really appreciate figuring out what you want us to look at next.
And maybe just a final thought to leave you with. The company's investing heavily in commercializing solid-state batteries,
Right.
while they're also getting these solid wins with their current lithium-ion tech. The big question is, how quickly does the market start pricing in the long-term potential of that solid-state technology? When does the valuation shift from seeing them just as an RV and marine battery supplier to maybe valuing them as a broader energy tech IP company? Figuring out when or if that perception shifts, that's what will likely determine the true long-term potential, the ceiling, for this stock. Something to think about.